Last week on this show, we wondered whether Genesis, the struggling crypto lender, would be the next domino to fall in the wake of FTX's collapse. And indeed, a crypto lender fell, but it wasn't Genesis. We'll talk about that and turmoil elsewhere in the crypto market on today's Daily Defiant. Thanks to Opolis for sponsoring this video. More on them later. This morning, New York time, BlockFi, one of Genesis's competitors, filed for Chapter 11 bankruptcy in New Jersey. Recall that this development comes a little more than 2 weeks after BlockFi suspended withdrawals due to the lack of clarity on the status of FTX.com, FTX US, and Alameda. Recall also that BlockFi was more closely linked with FTX than most. Back in July, FTX's US arm signed an option to purchase BlockFi, and it was a stunning reversal of fortune for BlockFi, which had been valued at more than $3 billion last year. As with just about every morsel of bad news this year, it all started with the crash of Terra Luna, the catalyst for the drama-filled blow-up of crypto hedge fund Three Arrows Capital in June. BlockFi lost $80 million when Three Arrows collapsed. Around this time, Sam Bankman-Fried, FTX's CEO, was building a reputation as a magnanimous crypto mogul, the lender of last resort willing to put his own company's money on the line to save other companies and, more importantly, their crypto-curious customers. In June, FTX gave BlockFi a $250 million credit line. On July 1st, both companies announced it would extend another credit line worth $400 million and give FTX the option to acquire BlockFi for as much as $240 million based on performance triggers. Zach Prince, BlockFi's CEO, insisted it wasn't a sign of an insolvent company. He said, and I quote, "We have not drawn on this credit facility to date and have continued to operate all our products and services normally. It was important to add capital to our balance sheet to bolster liquidity and protect client funds." Bankman-Fried echoed the comment in a tweet of his own. And I quote, "BlockFi is financially strong. All operations are normal, as they have always been, and assets are safe." That may have been true, but here's what matters now. The acquisition of BlockFi by FTX had yet to be completed when BlockFi suspended withdrawals November 10th, according to the company's co-founder and chief operating officer, Flory Marquez. The next day, November 11th, FTX filed for Chapter 11 bankruptcy. Now, BlockFi has filed for Chapter 11 bankruptcy. Due to the recent collapse of FTX and its ensuing bankruptcy process, which remains ongoing, the company expects that recoveries from FTX will be delayed, BlockFi said. Meanwhile, it's going to ask the court for permission to keep paying employees so that it can continue business-critical functions during the Chapter 11 process. According to the release, BlockFi has $256 million in cash on hand, which, and I quote again, is expected to provide sufficient liquidity to support certain operations during the restructuring process. Now, there have been problems elsewhere in the crypto markets over the weekend, but first, a word from our sponsors. Life as a Web3 indie worker is tough. Tracking multiple income sources, looking for healthcare, withholding taxes, all waste time. Opolis is a digital employment co-op made for indie workers by indie workers. Opolis provides pay stubs and annual W-2s for proof of employment and offers affordable group healthcare benefits. Also, Opolis members earn work tokens and share in profits for utilizing member services like running payroll and referring friends. Intrigued? Learn more at opolis.co. Back to our story. Elsewhere in crypto land, people watched nervously as Wrapped Bitcoin, or WBTC, lost its peg to Bitcoin itself over the weekend. This is problematic because Wrapped Bitcoin is the version that allows the original digital currency to be used in DeFi. Remember, wrapped tokens are essentially representations of other tokens on non-native blockchains. WBTC isn't Bitcoin, but an IOU for Bitcoin on Ethereum that can be traded as if it were Bitcoin on Ethereum. On crypto exchange Kraken, WBTC is traded at roughly 1% discount for much of the past fortnight since the collapse of FTX, with the token falling as low as 0.98 BTC on November 25th. Like the bankruptcy of BlockFi, this is, in part, fallout from FTX and sister company Alameda. A chart circulating on Twitter shows that Alameda Research is by far the top wrapped Bitcoin merchant by the number of tokens minted, having created more than 100,000 WBTC. That and other data prompted some, including a crypto influencer going by the pseudonym Duo9, to warn against exposure to WBTC due to concern that the underlying Bitcoin backing Alameda's WBTC could be commingled with FTX's funds or otherwise impacted by the recent insolvencies suffered by major crypto firms. Fortunately, that fear has largely passed, with WBTC mostly returning to its peg by the start of the work week Monday morning. Some in the industry were even critical of the fuss made over WBTC's depeg. Crypto influencer Udi Wertheimer called it misinformation. And I quote, "Alameda was a WBTC merchant, which means they'd accept BTC from customers and send it to BitGo to mint WBTC. Alameda never custodied BTC themselves." Chen Fang, the chief operating officer of BitGo, Decentralized digital asset custodian servicing wrapped Bitcoin, called it fake news. "Every WBTC is one-to-one backed, verifiable, and on-chain," Fang said. Amid all the doom and gloom, the crypto community decided it would have a little fun. A number of influential voices in the industry took to Twitter over the weekend to fret over the depeg of wrapped Ether. Bloomberg picked up the story, citing analysts' concerns over wrapped Ether. Fortunately, that blowup never happened. Let's hope all the other monsters in the closet are just figments of our imagination too.